Good afternoon, everyone. Can we move to the next slide, please? Good afternoon. I'm Christine Shao. I'm the Managing Director of the Stevens Initiative. I'm joined by two colleagues who will help present today's topics. Andy Schaefer, who is Senior Program Associate and manages our grant portfolio, as well as Phoebe Amend, our Program Coordinator, who also supports our grants portfolio. We're so pleased you can join us for today's webinar about budget and compliance for the Stevens Initiative 2020 Virtual Exchange Grant Competition. We'd like to start with a general overview of the topics we'll cover today. After a brief introduction to the Stevens Initiative, we will briefly discuss the funding source, provide an overview of the uniform guidance to include cost principles and procurement methods. Then we will discuss the budget and review each of the budget categories. And finally, we'll briefly discuss monitoring and oversight requirements. If you have questions at any point during today's webinar, please type them in the Q&A box. The Stevens Initiative aims to make international learning experiences available and accessible to an unprecedented number of young people through virtual exchange that connect youth in the United States with youth in the Middle East and North Africa. The initiative is a lasting tribute to Ambassador Stevens, who dedicated his career to building bridges between people in the United States and the MENA region. U.S. Ambassador to Libya, J. Christopher Stevens, studied in Europe during high school and college, and he served as a Peace Corps volunteer in Morocco. These experiences shaped his view of the world, they fueled his curiosity, and prepared him to be a diplomat of goodwill who earned the esteem of people wherever he served. The initiative was conceived and developed in close partnership with the family of Ambassador Stevens and was launched in 2015. We're sponsored by the U.S. Department of State with funding provided by the U.S. government, and it's administered by the Aspen Institute in Washington, D.C. Additional funding is provided by the Bezos Family Foundation and the governments of Morocco and the United Arab Emirates. While we don't hold a strict definition of what is and what is not virtual exchange, we think the following text serves as a good guide for the field. Virtual exchange involves sustained communication and collaboration synchronously, in real time, or asynchronously over a period of time. Many practitioners believe that facilitation by prepared, responsible adults, often but not always educators, is an important component of a successful virtual exchange. Virtual exchange can be integrated into many different subjects, from science to social studies to business. The initiative seeks to build the field of virtual exchange by working in three main areas or pillars of work. Our first pillar of work is called grant making. The initiative runs a grant competition every 2 years where interested educational institutions can submit an application to administer a virtual exchange program connecting youth in the US with youth in the Middle East or North Africa. We also have an area of work called our Knowledge Hub. Through these grant programs, the initiative is able to collect data, share best practices, and develop resources to help grow the field. Acting as a knowledge hub where those interested in learning about virtual exchange can find a wide range of guides, toolkits, and studies. And our final pillar of work is called advocacy. Having these resources available helps support the work of the initiative when it comes to raising the profile of virtual exchange. And while our scope of work is focused on US MENA programming, we advocate for the field as a whole. And I'll turn it over to Andy now to talk about our funding source.
Thanks, Christine. Can you hear me okay?
All good, yes.
Great, thanks. All right, so just to talk a little bit about the funding source for this competition, the Aspen Institute, which is where the Stevens Initiative is housed, has a cooperative agreement with the U.S. Department of State. And so the funding that the Stevens Initiative receives from the State Department is then passed on to subrecipients, which are those of you who are applying for funding from the Stevens Initiative. So technically, those who receive Stevens Initiative funds are subrecipients of U.S. government funds, but for the sake of ease, we are using the term grantees interchangeably with subrecipients. Because those of you who receive a grant from the Stevens Initiative would be subrecipients of U.S. government funds, the federal requirements and regulations that govern the Stevens Initiative's relationship with the State Department also flow down to our grantees or our subrecipients. It's specifically the federal regulations that govern our grants are in the U.S. government's Uniform Guidance 2 CFR 200 and 2 CFR 600. You might want to familiarize yourself with these regulations, which you can find online if you have never seen them before. But Christine's going to talk a little bit more about the specifics of that uniform guidance in just a minute. So just to paint the picture further of how this relationship works, we have the U.S. Department of State as the initial funder, which provides funds to the Aspen Institute's Stevens Initiative. The Stevens Initiative at the Aspen Institute is responsible for distributing these funds as grants, then conducting oversight and monitoring of its grants. We provide technical assistance to grantees, and we build strong partnerships with grantees, as well as the broader virtual exchange field, all in an effort to grow and expand the virtual exchange field. You, as the subrecipient, or as the grantee, as we've been calling it, are responsible for implementing the proposed work. So we will look closely in your application at your internal controls, which includes monitoring and oversight, accounting and finance systems, including a general ledger and an HR setup. You, as the grantee, are responsible to have strong fiscal and program management systems to properly steward federal funds and to adhere to the federal funding requirements per those guidelines that I mentioned in the previous slide. And lastly, you as the grantee are responsible for ensuring appropriate progress toward the performance that you outline in your proposal.
So over the next few slides, we will discuss the uniform guidance and some key points for you to keep in mind as you're developing your budgets. Just please note that it's a pretty simplified overview and not a substitute for reading the regulations. The uniform guidance provides a government-wide framework for grants management, and again, the uniform guidance is 2 CFR 200 and 2 CFR 600, as Andy had mentioned earlier. Again, it is a government-wide framework for grants management that helps to strengthen program outcomes through effective use of grant-making methods, performance metrics, and evaluation. This guidance applies to nonprofits, institutes of higher education, states and local governments receiving federal funding. The cost principles establish principles for determining the allowable costs incurred and how funds can be spent. These principles are designed to provide that federal awards bear their appropriate share of costs recognized under these principles, except where restricted or prohibited by statute. And finally, the guidance sets forth audit requirements of grant recipients, and basically that's how taxpayer money is assessed. So we'll touch on a few of these requirements in the next few slides. There are some basic concepts that govern these cost principles. Essentially, all costs must be allowable, necessary, allocable, and reasonable. It's important that you think that all costs are reasonable and that they would pass the prudent person test. This idea of determining what's reasonable can be a very subjective process. So you should ask yourself if the costs reflect the same action a rational, sensible, prudent person would make. With that, you should also establish that the costs are necessary for the performance of the project and are consistent with established institutions' practices. Additionally, costs should be allowable under the regulations or award provisions. So in addition to being necessary and reasonable, they are allowed within the terms and conditions of the award and within your own organization. Finally, costs should also be allocable and verifiable, meaning they should benefit the project, be easily identified and assigned. So before moving to the next slide, I want to tick through some generally disallowed and allowed costs. As you can see on the left-hand side, alcohol, entertainment costs, advertisement that promotes the organization are disallowed, although advertising for recruitment is allowable. The two bullets at the bottom of the disallowed column represent specific disallowed costs that are more specific to this award. So cash prizes to incentivize youth participation, as well as paying for youth to participate in the virtual exchange program are disallowed. You may not find those specific costs in the federal regulations, but these are specific costs disallowed for this type of award. And as you move over to the allowed column, you'll see that salary and fringe benefits, stipends for educators and facilitators, as well as educational materials, developing curriculum materials and costs for curriculum integration, as well as software costs, which will include anything from digital cameras, flip cams, webcams, those types of items to support online project work are allowable. The final bullet that I have here is for communication support. So that's going to include things such as website development, developing outreach materials, and photography as well. And please note again, this is not an exhaustive list. These were just items that we thought would be helpful for you to think about as you're developing your budget. And they also represent some just lessons learned we've seen with budgets that have been submitted to us, and we've had to go back and have further discussions on what's allowed or disallowed. If you have any questions about what's allowable and unallowable, please do read through the regulations, and of course, reach out to us if you have any questions. Great. So here are some key takeaways, as I know that we just discussed these items quite quickly. To tick through them, ensure that cost principles apply to any cost charged to the project. Further, also ensure that costs are treated consistently with established institutional policies and practices. And very generally speaking, note that direct cost can be charged to a specific award and indirect costs can be charged to multiple awards. That's going to be very key for some of the organizations that are small when you're thinking about what's a direct cost and what's an indirect cost. And here are some very practical questions that I wanted to offer for you to ask yourself as you're building out your budgets. Think, do I really need this expense? Is the expense targeted to valid programmatic and administrative needs? Is this the minimum amount I need to spend to meet my need? Do I have the capacity to use what I'm purchasing? Did I pay a fair rate? And finally, if I were asked to defend this purchase, would I be able to? And again, as you're building out your budget, you should also be thinking about methods of procurement and thinking about the steps you might need to take once you are approved. You will need to account for the proper procurement method for any contract. A micro purchase is any service or good procured between $1 and $10,000, and no competitive quotes are required if management determines the price is reasonable. Small purchases are any contract between $10,000 and $250,000, and formal quotes or solicitations must be received from an adequate number of sources. Next are competitive methods. It's highly unlikely that you will have a contract valued at over $250,000, but still, just to make sure we're thorough, if you do have a contract over $250,000, it must be posted publicly, and you must receive formal solicitations that are reviewed and scored against identified evaluative factors. And then lastly, we have the sole source method of procurement. A sole source method is defined as any contract entered without a competitive process. Some circumstances which may allow for a sole source include the item or service is only available by one source, competitive solicitations is determined inadequate after a process is administered. Note that every sole source requires documenting market research, cost analysis efforts, to name a few, and any sole source requires Aspen Institute approval. So now we're going to transition to budget. We will spend some time walking through the various cost categories, but before doing so, let's talk about the importance of budgeting. A well-developed budget reinforces your credibility as an applicant, so please make sure to keep the formulas intact. Provide all the detail within the budget that we are asking for. You should use historical estimates to inform your funding requests. And most importantly, please supplement your budget with a well-written budget narrative to support the rationale, purpose, and calculation of cost. The budget narrative should be able to stand alone and provide enough information to the reader to help them understand the program. It should be in-depth and substantiate your costs as necessary and reasonable to complete the work described in the proposal. And finally, include contingency plans in your budget narrative and in your proposal design for any travel or events that may change due to the ongoing coronavirus pandemic or for any other reason. And I'll turn it over to Phoebe now.
Great, thank you, Christine. Can you hear me okay?
Yep, I can hear you just fine.
Great. So through these next few slides, I'm going to detail some budget categories, including typical costs that fall underneath each category, as well as some other items to keep in mind while budgeting for these categories. So first off is personnel. For staff working on the proposed project, we expect to see each staff member listed by title and employee name if applicable. In the budget template, you should utilize the annual salary rate and percentage of time that will be dedicated to the project. Some common job titles we see under personnel include program manager, program coordinator, communications officer, and evaluation specialist, just to name a few. Please note that we do not consider CEO or president costs to be allowable per Aspen Institute policies. If applicable, these costs should be recouped through indirect costs and should not be listed anywhere on the budget, including cost share. The budget template also leaves room for fringe benefit calculations. What you insert here should be backed up by actual documented known cost or an established formula. We will ask you for fringe benefit backup if you do not include it in your application submission. So costs that fall under participant support may include items like data plans, travel allowances, training, and resource materials. Most participant support costs should be for youth participants. However, we also consider educators or other facilitators to be participants in your budget. For example, if your budget includes stipends to educators, this would fall under this participant support category. On the budget template, there is a separate travel tab for you to itemize any expenses related to project personnel travel or participant travel. Please, as Christine mentioned before, be sure to include contingency plans for any travel plans within your budget narrative. Under supplies, you should list supply items by type. No item should be greater than $5,000. Any item listed is typically material that is consumed during the project. Please be as detailed as possible. Rather than writing out technology supplies or classroom supplies, please list out each item required for the project and its cost.
This is Andy again. I'm just going to go a little bit deeper into two additional budget categories, contracts and subawards. So it's likely that the organization submitting a proposal is going to plan to work with partners in the United States and/or the Middle East and North Africa. Partners is a pretty broad term and may encompass anyone being contracted to develop a curriculum, to an institution that might be co-designing or co-implementing a program with you. You can include payments to these partners in your budget, whether they are contractors or whether they are subrecipients. So for contractors, you should describe the product or the service to be procured by contract and provide an estimate of this cost. You should also rationalize the rate for this cost in your budget narrative. And as Christine mentioned earlier, there are federal policies on procurement. For subrecipients, you should list your implementing partner or partners that will help you carry out part of your federal award. And again, you should rationalize the cost for the rate of this subrecipient award in your budget narrative. You may wonder whether a partner on your project would technically be considered a contractor or a subrecipient. I suggest to all of you that you take a look at the frequently asked questions document that we have posted on SurveyMonkey Apply, which is where you will be going to submit your proposal. That has a full checklist in that document to help you determine whether a partner would be considered a contract or if they would be considered a subrecipient. But very, very generally, contractors provide you with a good or a service. Some examples might include serving as just a recruiting arm for your program, or designing a curriculum for your program, or maybe it's just an independent contractor who's evaluating your program. These partners generally operate in a competitive environment through that kind of procurement method that Christine mentioned, and they are not subject to the same federal compliance requirements as you, the grantee organization. Subrecipients, however, have a much larger role in the program beyond just providing you with a simple good or service. These partners typically provide input into your program design and or your program implementation. Subrecipients are subject to signing an agreement that is similar to the agreement that you as the grantee organization sign with the Stevens Initiative. And so therefore, subrecipients in your proposals are subject to adhering to the same federal guidelines. I think we might have lost our, I think we might have lost the person who's hosting our slideshow. Okay. Oh, there it is.
All right. Thank you. Oh, can we go to the next slide, please? Thank you.
Great.
Okay, I'm just going to touch on some remaining budget categories. So other direct costs include any items that do not fall neatly under other budget categories. For example, advertising materials. The budget template includes an indirect cost calculation. Please use your negotiated indirect cost rate, or NICRA, if your organization has one, or you may opt for the 10% de minimis rate. If you do not have a NICRA, you may only charge up to the de minimis rate. There is also a section for cost share. This is voluntary. The costs included under cost share must be verifiable from your records and cannot be included as contributions for any other federal award. So, just to recap some important items to keep in mind as you prepare to submit your budget. Please be sure to use the provided template available for download on SurveyMonkey Apply. Do not use your own budget template. If there are not enough rows under a certain budget category, please add a row. Again, please leave the formulas intact and follow the instructions listed on tab 1 carefully in the budget template. Adjust the indirect cost calculation depending on if you have a NICRA. Please be sure to match all dates listed in the budget with the budget narrative, project plan, application, and timeline. All application documents must match with the same period of performance. So now we're going to discuss some items related to monitoring, oversight, and compliance with these awards. Just to briefly touch on some reporting requirements, grantees are required to submit quarterly progress, financial, and evaluation reports. SI grants are cost reimbursable and payment is contingent upon receiving and reviewing all reports. Progress reports are based on program activities and upcoming objectives. Financial reports include costs incurred during the quarter with thorough general ledger detail.
Grantees are going to be expected to conduct work that is in accordance with their scope of work, which is essentially all of the information and the work and activities that is outlined in your proposal. A few ways that the Stevens Initiative will do this during the grant period includes site visits, desk reviews, sampling, either of invoices or of your partners to check up on the work that's being conducted, excuse me, and reviewing the reports that Phoebe just mentioned. In the event of non-compliance, the Stevens Initiative will take the appropriate measures with the grantee. Failure to meet program objectives will result in us working on a corrective action plan together, which could include a no-cost extension, suspension or termination of the grant, or the grantee paying the Stevens Initiative funds back. I just want to mention that these are pretty extreme measures, and we hope that the presentation that we've just walked through will help you build a sturdy foundation to be a compliant grantee if your organization receives an award.
We have a few pathways to support applicants. We have recorded resources on our YouTube channel. We also regularly update our FAQs on SurveyMonkey Apply. And finally, of course, please do contact us at Stevens Initiative at aspeninstitute.org to ask any questions prior to submitting your application. And that concludes our presentation. We are going to move into Q&A. And we thank you for joining us, and we're going to go on camera right now. So please type your questions in the Q&A and we'll try to get to them.
Great. So we've received some great questions so far. So I'm just going to start shooting them off, and so we can answer as many as possible in the next 30 minutes. Christine, maybe you can answer this one. It's a little technical. For universities that have a federally negotiated F&A rate, are there any limitations or restrictions on the amount of F&A that is allowed in the application? For example, restricted to an off-campus rate, limited to 15%, etc.
There is no limitation. We are required to accept your F&A rate. We have had a few negotiations with universities who have submitted, sometimes I think they're on campus or their research rate, and to see whether or not it's possible to accept the lower rate, which is the off-campus rate. So we've had a couple negotiations like that, but we are technically required to accept your full rate.
Thanks, Christine. We got a good question about the contingency plan. Andy, maybe you can answer this. Essentially, how detailed should a contingency plan be? You know, it would be helpful to know the level of detail desired, you know, just because standard is a little subjective. Is it, you know, 1 to 2 paragraphs or 1 to 2 pages?
Thanks for that question. There isn't necessarily any kind of strict guidance about this. We are just hoping that, especially in, you know, kind of the uncertain state of the world right now, that everyone outlines contingency plans for travel or in-person activities that may not necessarily be able to happen. So if you are writing this into your budget narrative, you know, just to completely ballpark, I would say a paragraph or 2 giving some thought to this is sufficient. We don't necessarily need to see, you know, a 2-page outline of your plans, but hopefully something that demonstrates your thoughts about what you might be able to do and a plan that might be feasible and appropriate for all of your participants.
Thanks, Andy.
Can I add to that, Phoebe, really quickly? Can I add to
Yeah.
that? I think a really important note there, which we didn't really touch on completely, was the contingency plans. I think you're right, we're geared a little bit more towards the events, but you bring up a good point, Andy, kind of also about the implementation in itself, right? So I think you're right, going through the exercise of thinking about what type of disruption might happen even next year, even though you don't have to write about that in the budget narrative, I think is a very important exercise to take on as you're developing your budgets. So just wanted to emphasize that, yeah.
Thanks, Christine.
Of course.
We received a couple questions, so I'm going to try to lump them together, and maybe you can both kind of tag team this. So there's a question about what documents on partnerships with other institutions should we submit? Kind of what documentation is needed to certify participation of MENA partners? You know, is a letter from the partner sufficient?
Yeah, I think that that is a great place to start. A letter of support or a letter of intent is something that's not required, but could be helpful for your application. And I believe in the application itself, there is probably a section to talk about what's the status of your partnerships as well. So those two hand in hand are important to have. Andy, do you want to add anything to that?
I don't really have much to add to that. There is kind of a partnership document that's required as part of your submission. And I think that's the place that you're referring to, Christine, where we ask the applicants to note what the status of this partnership is. And like Christine mentioned, if there are letters of intent or support that you would like to include in your application, that's great, but it is not required.
Thank you. Okay, maybe just a quick, easy question, Christine. Is there any cap on fringe?
There is no cap on fringe if you have a NICRA. So we will accept what the full fringe benefit rate is. And I know that some organizations haven't negotiated that with their cognizant agency, but we will accept that. For any organization that does not have that negotiated with our cognizant agency, you should be prepared to submit very thorough documentation on how you have calculated your fringe benefit rate. Recently, because we've seen quite high rates, we've been looking, although it's not a steadfast rule, to limit that to 30%, which is the Aspen Institute's rate. So that would be for organizations that don't have one that's a rate negotiated with the cognizant agency.
Thank you for that. Another quick one. Are costs for executive directors overseeing the project allowable, or does that fall under the no cost for president or CEO clause that we mentioned?
For an executive director, there's a little bit more flexibility because it's quite possible that they really are charging work that's more programmatic and could be directed toward that. So that's not the same as a CEO as a president. An executive director, there's more wiggle room.
Great. Andy, can you touch on confirming that an educator or facilitator of virtual exchange, whether they're considered a participant or personnel?
Yeah, okay, this is a little bit of a complicated one because ultimately this will depend a bit on your program setup. If you are, say, an organization or an educational institution in which your staff or your faculty is facilitating the virtual exchange and maybe also contributing to the curriculum design or the overall program implementation, budget-wise, I imagine, but again, this will depend on your organization, that person would fall under personnel. Where it gets a little bit complicated is in a couple of categories. If we're talking about participant support, if you have folks who are facilitating the virtual exchange who are not necessarily personnel, or if they're or if their payment wouldn't be part of their normal like salary that would go under personnel, then, you know, a stipend or something like that may fall under participant support. But again, this will kind of depend on the setup of your program as well as your institution's policies. Christine, I don't know if you want to add to that.
I think the last part was the most important, because in the part about looking at your institutional policies, because what we're providing today is a framework essentially, and kind of pulling all the lessons learned, the best practices we've seen, having gone through this a few times. It's quite possible that your organization has a policy that only allows you to facilitate payment to educators in one manner, and maybe it's not falling under participant support, perhaps it is under other direct costs. So I think, to Andy's point, you definitely want to see what aligns with your organizational policies. What we're providing today is just kind of a framework of what we've seen over the last few years. Yep. And then the one key thing is to really think about whether or not the facilitator or the educator is on staff. That's very, very important to think about too. Mm-hmm.
This is a bit of a broad question that maybe both of you can answer, but what kind of budget detail is needed for partner activities?
What type of detail is needed for partner activities? So if you're thinking of the budget narrative, there's a section for contractors and there's a section for subrecipients. I think a few lines outlining what your partner will be doing with you, to Andy's points earlier. Will they be helping you recruit? Will they be helping you implement the program? Will they be helping you design the curriculum? Outlining what duties they'll be doing seem like a good place to start. It doesn't need to be an exhaustive, detailed paragraph, but a few sentences I think would be good. Andy? Yeah.
I don't have much to add to that. I guess the only thing that I would add is, you know, if you're including detail about, say, a contract, if you are able to provide information about the negotiated rate on that contract, that would also be helpful for us to see.
We got a few, of course.
Quickly, sorry, Andy. When you say when you say the negotiated rate for the contract, is that referencing for a subrecipient, like a subaward, or for a contract?
It would be good for applicants to outline how they've gotten to the kind of rate that they've put into the budget for both contracts and for subrecipients. Yes.
Yes.
We got a few questions about tuition and membership fees. Can you Andy, maybe you can touch on, tuition being unallowable and membership fees, whether those are allowable or not.
Maybe what I can say broadly is that what we mean about tuition, or what Christine mentioned around cash prizes, which are a little bit different, but what we want to stress is that participants cannot pay to be part of a Stevens Initiative funded program. We understand that if a virtual exchange program is being implemented, say in a university space, we acknowledge that participants may be paying tuition to attend the university and, for like course hours in that course, but there can't be any kind of a like registration fee for participants to join a Stevens Initiative program. No money can leave the participants' pockets to participate. On the other side of that, we cannot, and Christine, I want you to correct me if I'm wrong, we cannot support tuition costs for, say, like a graduate student who might be helping with a program, who might be helping, with the research or the evaluation or the facilitation of a program. We can pay a stipend or some kind of a rate to, say, for example, that graduate student, but we cannot cover that graduate student's tuition. So these are kind of two separate things, but kind of like bottom up and top down.
Yep. Mm-hmm.
Great, thank you.
Phoebe,
Christine,
before we move on, was there also a second part to that, which was the membership fees?
I think Andy might have covered it, that it's unallowable to support, like the student cannot pay, participant cannot pay to be a part of a program that's funded by us.
Okay, that makes sense. Yep.
Yeah.
Mhm.
Christine, if an organization has a NICRA, does
Mhm.
it extend to partner costs or expenses, or is that considered like something separate?
If I'm interpreting this correctly, I think the question is, if an organization has a NICRA, does that NICRA also apply to their partner organization? It does not. Your partner organization will have their own NICRA or their own indirect cost rate, and if they don't have one, we can approve, you can approve technically the 10% de minimis if they've never received a NICRA before.
But does the NICRA charge to the subaward?
Yes, the NICRA does charge the subaward. It also depends on your NICRA. I'm not quite sure. So most NICRAs do have some rate that does apply to the subaward itself, and yes, that would be the case. But again, it depends kind of on a case-by-case basis.
Great, thank you.
Yeah.
Okay, so there's a question about allowable stipends. Can faculty receive stipends for academic year work on the curriculum? Can stipends also be used to pay to adjuncts to teach a course, like enabling them to implement the course? I guess maybe touch on like the allowability of stipends to educators.
I mean, the short answer is yes, they are allowable. And if anything, they're encouraged in some way. I think paying faculty or educators for their time to participate in a project is a good cost to have, and it encourages, incentivizes their participation. So, yep, it is allowable.
Maybe to add on to that question, we also
Mhm.
received a question about compensation for student workers. So someone that's monitoring the project or team leaders, is that acceptable?
Indy, do you want to take this one?
Yeah, generally this is an allowable cost. It sounds like, and I'm not exactly sure of this specific person's program setup, but if you have kind of non-participant but student, facilitators or assistants, it would be allowable to provide them with some kind of a stipend or some kind of a payment for their work.
And just to tie it into some of the concepts that we spoke about earlier, it would be important just to note that what you're paying as an educator stipend and looking at what you might pay a student, those costs would probably be quite different. So I think that's important to consider as well, just the reasonableness of it all. Potentially you're paying a $1,500 stipend to educator. Depending on the scope of work of the student, I imagine it probably wouldn't be the same. So you just want to look at those and make sure that they're leveled appropriately.
Great. We received a question about like a contractual question, Christine.
Sure.
So if they are planning to contract someone to develop curriculum, a person or an organization, and the amount is larger than $10,000, do they need to have various offers for that work? Or is it still okay to award the contract to someone they choose based on competency and experience? Yeah.
Number one, I would say that it would be important for them to look at their own internal organizational policies and refer to those and see what they say. From the federal perspective, you should have outside quotes from an adequate number of sources. So that's usually, industry standard is usually 2 to 3 sources. But you cannot just select someone just based on competencies. No, you'd have to receive quotes for that.
Great. We also received a couple questions about paying partner institutions. So one, can partner institutions personnel be paid for services rendered? And then maybe some general guidance about how those payments are made if you're able to.
Can you Can you say the question one more time, Phoebe?
Sure. Yeah, definitely. Essentially, we got a couple questions about partner institutions. So can partner institutions personnel be paid for services rendered, like curriculum development, recruiting students, etc.? And we also received a couple questions about is there guidance for how these maybe subrecipients or subgrantees can receive those payments? Like what is typical that we've seen?
So the answer to the first question is yes. You may pay your partners for their time worked or their services rendered. Again, you need to understand kind of what is the scope of work and what is that partner working with you on. That's going to inform the type of agreement that you have with that partner. If it is a contract, that mechanism is different than what you would have to sign with a partner who is considered your subrecipient. So if the partner is taking on work that is similar to your work, the things that we mentioned earlier, recruitment, curriculum decides, really programmatic work in itself, kind of the other half to your work, I would say that you're going to have a subrecipient agreement with them. So the question is, what type of agreement and how does that look like? That agreement is going to look very, very, very similar to the agreement that the Aspen Institute and you as our grantee will sign. Most of those terms and conditions will flow down to your subrecipient, and how you make payment to them will be outlined in that agreement. Essentially, they are normally cost reimbursement as well. So similar to what we will do with you as our grantee, you will submit an invoice to us, usually on a quarterly basis. We will review the invoice and we will make payment to you. Just the same kind of activity will happen with you and your subrecipient. They'll send an invoice to you, you will review it, and according to your policies and procedures, make a payment to your partner. But a contract is a different mechanism and it won't have the same terms and conditions outlined as what will be in a subrecipient agreement.
Great, thanks. Let's see, we have a couple questions about just the budget template. I just want to reiterate that that budget template can be found on SurveyMonkey Apply. The link is located on our website. Just a reminder that that template is located there. We had a question about the partner institution. Is it always required that the partner in MENA is always the subrecipient?
You want to grab this one, Andy?
Again, I'm not exactly sure about the circumstances under which this person is asking the question, but if you are applying from a US-based organization and you are proposing to work with some kind of an organization or institution in the Middle East and North Africa, it very well could be that that partner is your subrecipient, especially if they are kind of in a substantial way helping you conduct your work. And so you might, for example, be working on developing a curriculum together and bringing participants together and kind of co-implementing the program together. That seems like it would fall into the category of a subrecipient. Again, this will depend on the nature of your relationship with that entity. If you are an organization in the United States and you are just contracting an entity or an organization that's based in the Middle East and North Africa, and all that organization is doing is perhaps like providing your organization with participants, you know, just kind of bringing participants in, nothing else that's happening, it could be that that falls under the category of contract. But again, we encourage you to take a look at our FAQs and the checklist the checklist that is on our FAQ section in SurveyMonkey Apply. However, if the person asking this question is an organization that's based in the Middle East and North Africa, again, I'm not quite sure. then you would be the prime recipient, and you might have subrecipients in the United States. So similar to what I just mentioned, organizations that are based in the Middle East and North Africa that are eligible to apply to our grant competition can also be kind of like the primary grantee, and then you would have subrecipients or contractors in the United States.
Thank you. Christine, we received additional questions regarding, there are two questions, so I'll parse them out. One, kind of talking a bit more about sole source, like what is needed to document that. And then the second question is, some organizations have existing agreements with contractors who have already been doing that work. Do they need to resource the effort?
Right. So the first question is, what sort of documentation do we need to have at hand if we want to make an argument to have a sole source? You would need to thoroughly document the market research that you've done to identify that there truly really is only one organization or one person that can conduct this service for you. So having that market research, whether that's showing internet research or speaking to other experts in the field to identify the fact that there's really only one, again, organization or one company or one person that can conduct that work for you is very important. Oftentimes, sometimes, I think depending on the scope of that contract, if it's very technical and it's about a hardware or software system, it's really possible that there are going to be limitations to what type of service will work within your own infrastructure. So I think outlining those specifics along with the market research that then led you to have to make a sole source are important to have at hand. That is one thing. And then also doing some sort of like cost assessment as well will be important as well, and having that on hand when you submit that to the Aspen Institute for justification. And then what was the second part? Sorry, Phoebe, I forgot it already.
Sorry, the second part, did you mention a pre-existing agreement with the contractor? Does that need to be sourced out again?
I would again lean towards what your organizational policies are. What is the normal practice that your organization would do if they were to receive a federal grant? Would you have to go and rebid it out again? I think that's where you need to begin with first.
Great, thank you. Christine, we got a few questions about indirect costs, so maybe we can reiterate our policy accepting NICRA versus if you don't have a NICRA. Yep. And additionally, maybe could you give just some broad examples of what's typically considered an indirect cost for us?
Yes.
Which is tricky, but.
It's a tricky one, right? Because it's different based on organization. So the requirements for a NICRA, if you have a NICRA as an organization, we will accept that, period. If you don't have a NICRA, we have two options. The first option is for us to approve a 10% de minimis rate. We can only approve that 10% de minimis rate if you've never received a NICRA before. So that's one track. The other track, in full transparency, is that you can technically negotiate an indirect cost with the Aspen Institute. However, the Aspen Institute is not in a position to negotiate indirect costs with organizations. And so it's a complex process. We don't have a lot of confidence that we're going about it the right way to be fully open. So what we're doing is leaning on the 10% de minimis rate. It's the cleanest and most efficient route for all of us to take, because we could be negotiating rates for quite some time, and we don't want to do that. Does that help clarify?
I think it does, yeah.
And I think it's very into the second piece of that question. I think was like, what are some common things that are indirect costs? It really does depend. What you need to think about it is not really about what specific cost, and rather kind of the nature of the cost. If it's a cost that can't be directly attributed to the grant itself, and it can be spread over multiple awards or different programs, that is most likely an indirect cost. If it's a cost that can be directly attributed to this grant and to the work that you're proposing to conduct, it is a direct cost. And it's a very simplified version, but I think that's what you should lean on when you're trying to figure out what's direct and what's indirect.
Great. I think we have time for one last question. I think there was another few questions about kind of partnerships and organizations, institutions. Maybe can we quickly touch on the letter of support or intent? Can that be at the departmental level, or does it have to be institutional? And I guess maybe touch on, do partners need to be nonprofits or educational institutions? Andy, maybe you could take this one.
To start with the letter of intent or letter of support, there is no hard or fast rule about this. We will be glad to review any letters of intent or support that you would like to share as part of your application. But again, I want to stress that this is not necessary or required. It's great to see, but not required. The second question, Phoebe, was do partners have to be nonprofit organizations? Did I hear that correctly?
Are there any hard and fast restrictions for those partnerships? Do they need to be nonprofits or educational institutions?
Christine, I think you can help with this, but I think subrecipients need to be nonprofit organizations or educational institutions. Contracts do not necessarily have to be toward nonprofit organizations, depending on the nature of the contract.
Correct. That's exactly right. So I think partnerships is a pretty broad term. If we're talking about subrecipients, again, partners to the grantee who will be helping to conduct the programmatic work. Yes, they have to have a nonprofit 501c3 status or be, Institute of Higher Education. If not, for-profit works if you're a contractor, of course. Okay, we are just about at time, so I think we're going to close out. Just wanted to mention that we will be posting this recording to YouTube, and you will also see some reminders up here on the screen. The deadline to submit an application is October the 13th, 2020. If you have any questions, please do reach out to us at stevensinitiative@aspeninstitute.org, and also go to our website to see our SurveyMonkey Apply website to see the FAQs. We really appreciate you joining us today and all the great questions, and we look forward to seeing your applications. Thanks for joining us, and have a good day.